for Cambodia, given the fostering of that technology potentially is already 70% of the population?
So again, another disclaimer, whatever I say is my personal views. It doesn't necessarily represent my institution view.
Oh, please.
And I think in principle, Libra is a good idea, because we're talking about developing countries. We have a lot of migrant workers in the region who are trying to remit money back home, and it costs a lot of money for them to pay to these service provider, from somewhere between 10 to 30% of what they're paying. Now, if there is a solution where they can remit money cross-border in a much cheaper and more efficient way, that would be terrific. But having said that, there's a lot of things that I don't know about Libra, and we had a discussion with Christian just now as to, because Cambodia is a very dollarized economy, and the least we want is to bring a Libra into the picture and got dollarized, liberalized, and I don't know what else coming in. So we had to really understand what is it that they are trying to achieve. And from the little that I gathered is that it would just be used as a mean for cross-border transactions, and then whenever you got hold of it, you have to exchange the local currency and transact as normal as any payment platform. Christian?
Yeah, so again, it's important to take a step back and answer what was the use case, what was the problem we were trying to solve. And as I was mentioning before, remittances incur very high fees, especially cross-border. I think there's tremendous progress in many countries for national payment systems and unifying things around identity, and now you can clear value really effectively with low frictions, low cost, but that's not true on the cross-border aspect. And so when you think about, an early use case for Libra would be exactly someone trying to send a remittance, and the 7% number I was mentioning before is just an average. It actually hides a lot of dispersion around that 7%. In some regions, sending money cross-border can cost between 20 and 30%. So just pause for a second and ask yourself, from a financial inclusion and access perspective, what does it mean that every dollar or every euro you send, there's a 30% tax? So when you think about how Libra is likely to be used, my intuition is very much aligned with yours. People trying to send money, we use the network to effectively and instantaneously move value between different regions. But then let's remind ourselves, what will people do with that value that they just received? In most cases, they won't have a choice. They needed to buy goods and services, so they will convert back to local fiat. And again, that's why Libra was always designed with this objective of being a very efficient cross-border medium of exchange.
Okay, I want to bring the audience in here. Just put your hands up if you use a form of Facebook, whether that's Instagram, WhatsApp, whether you're on the Facebook app. Just put your hand up. Yeah, probably would have been easier to... Oh, thank you for the light. Okay, keep your hands up. Okay. Now put your hand down. No, not yet. Wait for it. Put your hand down if you would use a payment system attached to Facebook, whether it's on Messenger, Instagram, WhatsApp. If that would make your life easier, transferring money among your friends, put your hand down if you would use that. Okay, so there are very few hands left up. These represent the resistance to whatever it is that you're providing. Hi guys. Come in here.
I think it may not be resistance, it's also maybe people have an alternate view. So we'd love to work with Facebook to solve the problem. I think, but the problem in some cases is more basic. The problem is there, but it's KYC, it's sort of making sure that transfers are legal and for the right reasons. So just saying, the amount of transfer, like whether the fee is 5%, 10%, 20%, if you look at the corridors that have done a lot of work on this, say, India, US to India is a pretty low cost remittance to the extent the other person has a bank account. So there are other problems to overcome to ensure you're within sort of the legal framework of moving money. And frankly, we don't need to have a blockchain to solve the problem. Frankly, if you look at TransferWise and Zoom, they've solved cross-border problem to the bank population, and some of the unbanked is not covered. If you look at Ant or M-Pesa or WeChat, they've solved the inclusion problem. So people have solved the problem. It just necessarily doesn't have to be via like a cryptocurrency.
Is the problem solved by the electronics payment? I'll bring you in, Christian, in a second. But you're saying actually that you see the fostering, the harnessing of payment systems by WeChat Pay, Alipay actually is endangering the system because they're becoming too powerful. So where's the line between fostering greater inclusion and the utility that provides and a central bank like the Chinese central bank, the PBOC, stepping in and going, hang on a second, if someone's running this, we need to be running it?
I understand this question was the difference between WeChat Pay and Alipay and our CBDC, which is a DCEP, if I understand correctly.
My question is, you've said that there is too much influence potentially from the likes of Alipay, of WeChat Pay, and that the central bank, the PBOC, needs to be running this electronic payment system.
Well, actually, the two players, actually, they have already taken 96% of our mobile payment system, mobile payment market share. So in that case, we have to be prepared because they have their life cycle. We have, actually, the technical disconnection ever happened before to either of those companies that the service were disconnected. That a lot of people got influenced. So in that case, we have to get prepared for those kind of situations.
Christian?
So I don't think the problem is solved. Again, there's been domestic instances where the problem has been very successfully solved, but on the cross-border case, we're far from it. And yes, it's true that certain corridors have higher standards and needs from an AML and KYC cost perspective, but when we looked internally at least and tried to break those costs down, I think there's massive room for improvement. I think I speak for all the members of the Libra Association when I say that the goal is to have a network that is safe, secure, and actually meets and exceeds current standards for AML and KYC. We can use technology to make the process more safe and more secure. The current system has a number of flaws, so I think it's important to remember that there's an opportunity here also for improving on that dimension.
We're talking about a lot of the benefits here, fostering inclusion, cross-border payments, but what about the risks here? I mean, I was counting over the weekend 700 digital currencies. If we've got alternative currencies, be it a Libra, be it a different digital currency or coin operating in a traditional monetary system, is there a risk of loss of control of monetary policy?
So maybe I'll jump. I'll start. I think the risks are there in some ways. They're not very well understood. So I think what we are trying to do, or even what PBOC is trying to do, or even Cambodia is trying to do, is frankly not that different from what we do today. We are taking a currency that a central bank has created, monetary policy that's governed by a central bank, and creating a digital representation of that currency to solve a client problem, whatever the problem might be. I think when you think of things like, and I will even go beyond Libra, when you think of things like Bitcoin, the entire ecosystem has existed since 2009. It has never seen a stress cycle, ever. So when the next stress cycle hits, am I going to trust some smart people sitting in the Fed who've studied for years and years and they know how to deal with cycles, or am I going to trust some algorithm to kind of guide my future? I don't know. I'll probably pick the Fed, but again, that's a U.S. point of view.
The anarchists out there would say that all of you guys represent some form of centralized digital asset, and actually that's the last thing they want to be involved in. They would argue that with trillions of dollars worth of bonds trading with negative yields, kind of central bankers have had their time and they've screwed up the system.
I don't think that's a pretty limited point of view, and you can go with the anarchists because the anarchists don't believe in history. Now, you don't have to be a slave to history, but history does teach you certain lessons. I think monetary policy has historically been controlled centrally because when things go wrong, you need someone who can potentially break the rules to fix them. And I think that's what you're seeing. Frankly, people are breaking the rules a little bit to see if they can get the economy healthy in certain regions. Whether they will succeed or not is frankly not the expert. But I still think, it's the techno-libertarian anarchist point of view. It's out there. I don't think it's a big point of view. So.
You created a stable coin, JP Morgan coin. Libra, obviously the coin as a part of the payment system for Calibra. If the New York Fed came out with its own version, would you abandon JP Morgan coin? Christian, you're already preparing for a future where the New York...
Well, from our perspective, from the start, it was clear to us that eventually central banks would be issuing some flavor of central bank digital currency, and we wanted the system to be future-proof for that. In fact, if there was such a digital currency available in some of the jurisdictions that we're trying to build financial inclusion on, we would have definitely built on that. The challenge today is that there's no such digital on-ramp, and so the Libra reserve and all the thinking that went into ensuring that actually Libra is based on assets that are managed, controlled, and generated by central banks is very much a complement to monetary policy.
But if there were, would you abandon Libra, particularly given the fear factor, the pushback, the real concerns from central banks that go, we don't want this running as an alternative in our country, and it's a viable alternative. Would you abandon Libra?
I think what's interesting is that Libra is meant to be a payment network, and so it's meant to be on top of those assets. So CBDCs would just streamline the operations of the reserve. It wouldn't make sense in that scenario to abandon Libra, because now Libra would be even more effective. You could focus all your attention on that top layer, enabling cheap and fast payments, enabling all sort of innovation and applications on top of the central bank issued assets.
JP Morgan coin, die?
I'd be tempted to, yes, to kill it. But I think what you have to think about this is another risk in the system. So a central bank currency has to be very well designed, and you have to think through the implications for the system. So let's say the Fed was to issue Fed coin. We'd probably be tempted to kill JPM coin, but if people could move their assets to the Fed's balance sheet, why would they actually keep it at the commercial bank level? And that would basically, in a stress cycle, that would kill the ability for commercial banks to extend credit. Now, maybe that's a bad thing, or maybe that's a good thing. I'm not, commenting on the outcome. I'm just saying the current commercial banking system that runs the world would be at risk if a central bank designed a major currency in a bad way.
Is China best positioned to design it in a good way? Because you have centralized control, ultimately, of all of these layers.
Yeah, well, firstly, I think Libra actually is targeting the cross-border payments. But actually, from my point of view, the answer is never the technology, because the cost and the inefficiency of cross-border payments actually result from the system. The whole system design, the governance, the cost of Noel customer, and the cost of AML and safety is not from the technology cost. So you cannot solve this problem with new technology. That's my answer. So from my point of view, new technology is never the sole answer, the whole answer for the cross-border payment issues. So for our case, we are not targeting the cross-border payments. We are targeting the M0, which is the retail side of Chinese payment markets. And we also have a two-tier system. We keep the commercial banks in the loop, and we are actually a hybrid of account-based and value-based system. We can accommodate any technology could be employed by the second tier of the commercial banks. So we'll keep the monetary policy implementation untouched and the macro-prudential supervision untouched, and we'll keep the financial system as same as before.
So you're aiming to be cashless. You're aiming for a cashless society.
Well, I never imagined that China would become a cashless society. In my word, I would rather use the word of cash-light society.
Cash-light. One of the fears, I think, that people talk about with the PBOC, with the Chinese government, seeing all the information, seeing full financial information, is that there's a great deal of power in that, switching off some parts of the population if they are considered undesirable. What's your response to that fear, that this makes the government all the more powerful?
Okay, we know the demands for the general public, that is to keep anonymity by using the paper money or the coins, the metal coins, the mint coins, that keep anonymity from the government. We are using a technology term that is controllable anonymity. And we will give those people who demand anonymity in their transactions, but at the same time, we will keep the balance between the controllable anonymity and anti-money laundering and CFT, and also those taxation, some kind of circumvention, also the online gambling and any electronic criminal activities. So that is a balance we have to keep, and that's our goal. And we are not seeking full control of the information of the general public.
Do you want to come in now? No? I've been careful to respond. Sorry, come in here. Does an alternative digital currency represent a threat to your control of monetary authority? Potentially.
Well, I mean, theoretically speaking, the central bank has the sole control over issuing money, and our job is to control money supply. Now, if somebody else coming and also issue their own currency, then possibly it can interfere with the way we conduct our monetary policy. So that's potential risk. But I like to echo the point Mr. Mu was mentioning about Spider-Man said, with greater power come greater responsibility. And I think this is something that we, as central bankers, are very aware, particularly at the National Bank of Cambodia. When we introduced our product, the one thing that we didn't want to do is to have everyone's information in our database, because something's go wrong or anything, we'll have to respond to that. So what we did is we asked the banks to do the KYC. They have the information of their customer, just as with their usual services. We don't have access to this. And also we keep the commercial banks in the loop, because we don't issue our tokenized fiat money directly to individual. The banks are the one doing it. So in a way, you try to keep the traditional ways of conducting banking services as much as possible. And the reason is because as a central bank, the transmission mechanism of our monetary policy is through the banking system. If you take away the banking institutions from the equations, then you don't know whether what you're going to implement is going to be effective. And then unless we create a new monetary policy tool and new ways of transmitting all these policy, then at this stage we'll try to just make it as, we're trying to make a small change as possible.
We'll come at it from slightly different directions, but obviously we've got the private sector approach, we've got the central bank approach, different forms of centralization of new technologies. Well, what can regulators do here to help foster, and what's the danger actually that they stem innovation because they simply don't understand?
I think our point of view to the regulators has always been two things. One is focus on the activity, not the technology. So I would completely agree. I think, and that was my comment about like when the means become the end, you end up confusing the whole thing. And in many cases, we are trying to like shove in blockchain, like, it's like a hammer looking for a nail all over the place and can't find it. But I think a lot of regulators get very excited or suspicious when the word coin is mentioned. What is a coin? It's just basically an accounting mechanism. So our view has been look at the activity and then regulate the activity in a manner that provides safety, soundness to the economy, similar to what they do today. So frankly, if Libra is a valuable means to doing cross-border regulations or cross-border transfers, they should be held to the same standard when it comes to AML, KYC, FATF, whatever it is. So from our point of view, one is activity-based, and secondly, consistency. So it's pretty important for the at least major regulators across the world to have some consistency. What you don't want is either a race to the bottom or a race to the top when it comes to innovation, and both of those cause issues. I think the one other thing I would say is, frankly, we are sort of scratching at the edge of what this technology can do. All the use cases mentioned here, I mean, they're exciting. They're not radical. Like, I mean, we can solve these problems with the right public policy and possibly other means. But when it comes to things like programming a coin, that's where the real power comes out. And I think we're still scratching the surface. I mean, think of electronic money that can monitor itself for AML and not go to the wrong person because that person doesn't have the right certificate from the authority. So there's ways to create the future, which is what we are frankly interested in. And I think the analogy I would use is we are still sort of playing around in the Napster age. We're exchanging songs, it's kind of cool. Maybe it's slightly illegal in some cases, but it's kind of cool. But one day there will be iTunes, and then there'll be a day when there'll be Spotify. We just don't know what that is today.
Yeah. What about in your situation? I mean, 2.4 billion monthly active users for Facebook. The reaction from the regulators was, I think, a cross between astonishment, alarm, and act now and ask questions a lot later, quite frankly. What can regulators do to help to not stem technology in this sphere?
And again, I think this is not unusual of innovation in general. So if you roll back the clock and look at some of the major innovation around electricity, so talking about some of the statements Edison made at some point about why bother experimenting with alternative current. Regulators always face a very tough job, which is between allowing for experiments to develop and to nourish them, and also making sure that they comply with some of the very serious concerns that they have on all sort of different fronts. So I think what's important to keep in mind here is that if you look at market structure, and take remittances as an example, if you look at the frictions from an economic perspective, these are real frictions, and so there's opportunity here for building on financial inclusion, for lowering costs, and of course there's also questions. And on the Calibra side, we had planned for a very collaborative phase with regulators across the globe. It's the one we're engaged in. Now the entire Libra Association is engaged in that process. We've received tremendously valuable feedback already to date. Let's remind everyone that Libra is only 4 months old, so it may seem like the announcement was a long time ago, but I think when you think about this bigger, broader issues and the opportunity here, we're only 4 months in the making, and it's only since October that the association has come together as a new governing body to push the agenda forward. So to regulators, my question and invite is to keep engaging in this collaboration and conversations, to give us feedback. We had no pretense that the design or the proposed original design was perfect, and so we're very much in the phases of absorbing the feedback, building on it, and eventually focusing on that problem. That's what keeps us motivated every day.
It's been interesting to see the reaction globally, but also in the United States, and the pushback, the fear, the need for regulation, the alarm, not just about the technology, but about the speculation in digital assets, digital currencies. China doesn't have to necessarily worry about that so much, and what we've seen in the past couple of weeks is a dramatic focus on investment in blockchain technology, promotion, videos explaining to the Chinese people what this is. It came right down from President Xi. Is China going to win this race for technology, in your view, Mr. Mu? And what does that mean? What does winning here mean?
Well, actually, I can only talk from my point of view. That is, like our design, system design for our own CBDC, the DCP, the digital currency and electronic payments, we adopted a two-tier model. On the first tier, the central bank tier, we are actually technical neutral and business neutral. We don't intervene what kind of technical path, the second tier, which are those commercial banks or commercial institutions are taking. So we are, like I said, we are actually account-based and a hybrid of account-based and value-based. We could accommodate any technology they use, either DLT or like a mobile money like M-Pesa, or electronic e-wallets, payment instruments. Either of those technology paths we can adopt it, we can accommodate. So whatever they use, we could accommodate. That will be a market-driven approach. Let the market decide. Let market to, like a horse race. Who win the public? Who win the market? Who will win the race?
Could RMB coin be used to facilitate trade and investment in the One Belt, One Road project? Is that a possibility in the future? You said it's a focus on the domestic economy, but could it facilitate development, trade along the One Belt, One Road? Could Brazil one day use RMB coin, digital coin?
Slightly misunderstanding of our functions of our CBDC. We actually are focusing on the M0 substitution, the surrogate of M0, which is the paper notes and coins in circulation. So we are focused on the retail side, the small amount usage, the small amount payment instruments. We are taking care of the daily payments services provided to the general public. We are not targeting those capital market. We are not targeting those trade financing sector. So
now or forever?
Well,
Just asking.
With the development of financial markets, there could be some time in the future there will be a merge among M0, M1, M2, but it's far away from us. Now we are only targeting those M0 side. A very important consideration is from the monetary side, because we are actually just a digital version of RMB. That means 100% reserve will be deposited in the central bank. But if we extend our service to the M1 and M2 side, that means there will be, that will be the derivative in terms of deposit, and then we'll have multiplier for the money. And that means we don't have enough reserve for the DCP issued. That will create a problem for the monetary policy implementation. So for now, we are not targeting the M1 and M0. We don't want to cause any problem to the monetary policy.
Early days in this technology. Sheree, very quickly, I'm going to put you on the spot. To foster greater trade with China, would Cambodia be willing to use an RMB coin?
It's too far away.
Good answer. Watch this space. We're running out of time, but I want to go down the panel and just very quickly get your views on projecting 5 years forward. Best case scenario for this technology and worst case scenario. I'll start with you, Omar.
I think a best case would be to have a few large global platforms that are interoperable in terms of digital currency, which will solve, I think, a lot of the use cases and problems we are discussing, and consistent regulation. So that would be ideal. I think the worst case scenario would be, continuing chaos and, frankly, this race to create more and more and more cryptocurrencies for, I don't know what, but just chaos out there.
Is JP Morgan on the list of currencies that gets used, the JPM coin?
I think it's for our clients wholesale, and that's pretty much
where it stays.
Worst case.
Where it stays. It stays just being used for clients.
Yes.
Okay. Mr. Moo. Worst case, best case.
The bad news is, like my colleague said, that will be a chaos if there's a lot of cryptocurrencies issued without all those regulatory and oversight and legal issues well addressed. That will be turbulence for the whole global financial market. That will be the worst case. Best case, well, from the regulatory side, we will see, well, we are trying to promote the fast payment system developed in all the countries, and actually most of those countries and central bankers are trying to promote fast payment system to solve the cross-border payment issues. At the same time, we are trying to build our own CBDC. We could have an alliance, that means or a new MF currency, like ESDR, to solve these cross-border payments issues.
Backed by the renminbi.
Well, we are be part of the big family.
Okay, just be very clear. Could JP Morgan coin or Libra ever be welcome in China?
Well, that will be the question to Christian, because I don't know how many people are using Facebook in China.
We could probably count them on one hand. Go on.
Yeah, so, best case, we meet and exceed the Sustainable Development Standards. The goal there is 3%. I think a network like Libra on remittance costs can push this very close to zero. And the worst case, to be honest, is the status quo. People that are currently unbanked or severely underbanked keep paying very high fees and being taxed for being poor. So I think that's the challenge that we have in front when we think about cross-border.
I agree with that. Sorry.
Well, the blockchain, there's a lot of hype about blockchain and about it being the most secure technology out there. But as you know, Titanic sank on its first sail. So the worst case scenario is that somebody would crack the code and hack the whole blockchain technology, and it would be quite a chaos. The best case scenario is that nobody hacked blockchain and it's still as safe as we know it for now, and people can explore other possibilities and use case of it.
Wow, for someone who's not a technologist, comparing the potential risks to a blockchain is potential Titanic in proportions.
That's what I told my guys when they told me, because I'm not a techie person again, and I barely can manage my Microsoft Office. And my guy came to me and said, let's use blockchain, it's the safest. And I said, well, you know what, Titanic sank on its first sail, but if we don't sail, then we would know if it would sink or not. So we tested it.
Time to sail. Your panel. Thank you, guys.
Thanks so much for that lively discussion, Julia, and also a big thank you to our panelists, Desiree, Christian, Changchun, and Uma. As the photographers take some photos of our panelists, I would like to inform you that we will now